I'll go ahead and get started here. Let's see here. All right. So again, I'm the Loan Dude. Welcome. Nice to meet you guys. If I haven't met you guys before, my website is loandude.com. And we do always have our next webinar posted in the upper right-hand corner under webinar. So I'll talk about our next one when we get to the end of today's. All right. So rates through the decades. Okay. This is a great example. I've been doing loans for over 20 years. When I first started doing loans, the average interest rate I was doing at the time was 8%. That was the standard rate. I started doing loans in the late 90s. I worked at the time, I worked for Citibank. Our rate at that time, our prime or our 30-year fixed rate was 7.75. I very much remember that. And, you know, when interest rates fell to 7 and people were like, oh my God, this is amazing. Then they fell to 6. We were like, oh my gosh, they're never going to get cheaper. Well, you people who have had the ability to see where mortgage rates have been the last, let's call it 10 years, they have been below 5%, which is a very, very, very unique situation. Kind of that little asterisk that's kind of hidden away from everything. So interest rates over history, you guys can see on the slide here, interest rates have been a lot typically higher than they are today. Now, interest rates at the beginning of this year, so at the beginning of 2022, when we started January 1st, the average 30-year fixed was 3.25%. Today it is 5.5. So we have gone up over 2 points in less than 5 months. Now that in itself is the largest amount we've gone up in interest rates in the shortest amount of time in our history since the 1980s, okay? So we have moved a huge range in interest rates this year. Typically, when interest rates go up over a span of time, they typically go up a quarter to maybe a half of a point at the most. We've gone up over 2 full points. And I'm going to show you guys when we get later down the road here, really how that impacts you guys. So I'm going to give you guys a little bit of history on rates. I'm going to talk a little bit about credit, and then I'm going to get into the meat and potatoes and talk about the down payment assistance. I promise you guys, I will get you guys out of here in less than 20 minutes. I promise you. I know everyone's time is important, especially going into a 3-day weekend. All right, so let's get started here. All right, so I want to start you guys off. You guys, did you know that as an individual, you guys have the ability to get 1 free credit report every single year? So I highly encourage you guys to go to www.annualcreditreport.com and fill out for your free credit report. Now, the company that I have on here, Blue Water Credit Repair, is a company that I put on here. I have had some credit issues myself. I went through a divorce many decades ago, and my credit was in tatters. This company, Blue Water Credit Repair, they started their business in 2008. I was their very first consumer. I was their first client. They're a company located in Roseville. Now, today, in 2022, they are one of the largest credit repair companies in the United States. So they are a huge company. The reason I love to use them, obviously, is because I've had personal success with them, but they are local to our region. And so they have the ability for you to physically meet with someone face-to-face, which I feel like when you're working with credit, it's just a better feeling to be able to reach out and touch someone when they're helping you fix your credit, okay? So, and also, when I finish this, you guys, we will email you guys copies of all these slides. So if you're trying to take pictures or write these things down, I promise you guys, we will send you a copy with all the PDF slides, and you guys will have all this information, okay? All right, how do we get your credit score? How does your credit score show up, okay? I'm gonna just touch on this real quick. About 35% of your credit score is derived from your credit history, okay? How much are you using your card? And are you using your card? Or are the payments late? Are all your payments late? So I pulled a gentleman's credit recently. He told me he had great credit. And he specifically told me before he told me he had great credit that he never uses his credit, but he told me it was great. So when we looked at his credit, lo and behold, his credit was not that great. And the reason was this: he never actually used the credit that he had. So he had gotten credit cards years ago, but he never actually used them. So let me tell you this: if you're one of those people who uses their credit card, and then as soon as they get home from using the credit card, they pay off the bill, this is what it'll do to your score every month. It'll give you 0 points. So wait for your bill to come in the mail before you pay it off, and then you get the reported credit history of doing that, okay? The second biggest factor on where your credit score comes from is the debt ratio. How much credit do you have available and how much is being used? Again, it goes back to that example I was just giving. If you are trying to keep your credit balance at 0 all the time, it is giving you 0 help on your scores, okay? I promise you that. I highly encourage people to keep a balance of at least 1 to 3% on their credit cards. Now, what that means is maybe you go buy some groceries or some gas, things you would normally pay cash with. Do that with your credit card, wait till the bill comes in the mail, and then make the payment. I promise you by doing that, it'll help your scores incrementally go up every single month, anywhere from 3 to 5 points by just doing something simple like that, okay? When you leave your credit cards at zero all the time, your credit card FICO scores will not only not help you, well, they will actually drop a little bit, okay? Now, I always tell people for the balance of trade lines to have, it's highly, highly important that you have a minimum of at least 2 open trade lines on your credit that are type of credit cards are revolving, okay? The installments, the secured private loans, the installment loans, those don't necessarily help swing your FICO score as much as you would think. It's specifically those revolving accounts. So I highly encourage people, get 2 revolving accounts of credit, okay? If you feel like you don't have very good credit, a great place to start is Capital One or Credit One, creditonebank.com or capitalone.com. Those 2 companies will give credit to people with very, very low credit scores. Typically, you can get a credit card with them with as low as a 580 FICO score. So I highly encourage you guys sitting on the call today, if you're looking to start some credit lines, Capital One is a great one and Credit One is a great place to start. Okay, this will help you guys build your credit. Okay. All right. These are waiting periods. I want to just touch on this real quick. Waiting periods of what happens when you've had the financial unfortunate events in life. Again, we've all had them. I had a short sale on my credit in 2007. So if you've had a foreclosure, you have to wait 3 years and 1 day before you can start to do a loan. If you've had a short sale, 3 years and 1 day before you can get a new loan. If you've had a Chapter 7 bankruptcy, 2 years and 1 day from your discharge date, and then we can start it there. If you are currently in a Chapter 13 bankruptcy, you have to have been in your repayment plan for 1 year, and then you got to listen to this. You have to get approved with my pre-qualification letter, and we have to give it to you to give back to the bankruptcy court, and they have to approve it before you can go out and either shopping for a house or doing a refi or anything like that. Okay, so if you're in a Chapter 13, there's quite a few more steps that are involved in that. Okay. Now, I'm giving you guys kind of a general term of how long it takes to wait for foreclosure, short sales, and those things, okay? So on average, it's typically 3 years and 1 day from whenever the occurrence finished. So if it's a foreclosure or short sale, when did it actually finish and happen and end? Not when did the short sale start, when did it end? Now, how I will know this, I promise you, when I pull your credit report is gonna tell me all this information. So if you've got a foreclosure, short sale, and whatnot, we will find that information in bold print right on your credit, fortunately and unfortunately. Okay. All right, here we go. We're gonna get started, so get on your seatbelt, all right? So the first thing I wanna start with was an example. These are 2 very recent examples of loans that I've closed with clients of mine, okay? The first one, let me give you the premise of what this was. This was a client living in a house. Her and her family, her and her husband and their 2 kids had lived in this house for 11 years, okay? They were paying rent. They were paying a little bit over $2,000 a month. And the landlord was a married couple. One of the landlords passed away. And so the spouse came to my client and let her know that within 60 days, she either had to buy the house from them or move out of the house. Well, she panicked. She called me. She got referred to me from a realtor. The realtor told me, her situation and whatnot. So when I talked to her, this was her number one thing. She said, me and my husband only have $8,000 to buy a house. She said, I don't think that's realistic. I said, hold tight. Let's see what this looks like. So we were able to get her qualified for the down payment assistance. The purchase price they bought was $473,000. This closed on March 28th. The house, just to put this in perspective, the house is already worth $485,000, so it's worth $12,000 more than when she bought it. The down payment assistance we got her was $25,000 in down payment assistance. Check this out. She bought this house for a total money of out of her pocket, $4,905. That was it. That was her down payment, her appraisal, and her closing costs. That was everything for the house, $4,905, okay? So just a little bit more than 1% of her purchase price, that's what she bought this house for. Now I want to show you the other side of the fence, okay? I have an example right down below there. This is an FHA purchase. This house closed this week. It actually closed at the beginning of this week. The purchase price was $648,000, okay? The amount of money the client had to come in with, they didn't have any assistance, okay? Their down payment, closing costs, and appraisal was a total of $35,648, okay? $35,000, guys. That's quite a bit difference than the 5,000 we had on the example above. And so I want to show you guys a perspective of what it looks like with using down payment assistance and what it looks like without using down payment assistance. Okay, so I want to give you guys a perspective here of the different sides of this. Okay, all right. So CalHEFA. CalHEFA is an agency. It's a California agency, and it's a private agency. It is not a government agency. And CalHEFA has been around since 1975. It's a California state agency, I should say. CalHEFA has been around since 1975, and their specific mission is to help low and moderate income buyers afford to buy a house in California. Throughout their history, they have helped more than 200,000 people buy houses, and we use CalHEFA a lot. Sacramento, our region, is the #1 region for CalHEFA loans in the United States. So we do a lot of CalHEFAs here. And the CalHEFA is a great product. There is only three requirements you have to qualify for this, okay? The first requirement you have to have is you have to have a 640 credit score, okay? Now, when we pull your credit, we're gonna pull from the 3 major bureaus, TransUnion, Experian, and Equifax. Now, for all you Credit Karma friends, okay? I love Credit Karma and I love all these different credit agencies. However, here's the asterisk here. When you're using Credit Karma or any of those entities, they are typically going off one of the 3 bureaus, okay? So they're giving you 1 score of the 3 scores that we're gonna utilize. When we pull your credit, our credit is pulled in real time. TransUnion, Equifax, and Experian. We're gonna utilize the numerical number of the 3. And I'm gonna be extreme here. So if you have a 700 FICO and a 740 FICO and a 710 FICO, the one in the middle is 710. So even though you got a 740 in there, unfortunately, we're going to use the 710 credit score, okay? So when we pull credit and when we're doing a loan and you got to qualify for CalHEFA, your middle or median score has to be a 640, okay? Now, if you have multiple borrowers on there, a husband and wife, and we're using both your incomes, both of you guys have to have a median income of 640, not one or the other, and we can't combine them, unfortunately, okay? So both of the clients have to have a median FICO of a 640 in order to qualify for this product, okay? The second thing is this house has to be a primary house, okay? You guys have to commit to actually living in this house. It cannot be an investment property, okay? These houses, these types of loans, you cannot have your non-occupying you cannot have your parents co-sign with you if they're not gonna live in the house. So if you have a co-signer and you're gonna use down payment assistance, your co-signer has to live in the house with you, okay? This is really important, guys, all right? The third thing with CalHEFA is your whoever's going to be on the loan, the household cannot make more than $180,000, okay? So as long as you guys make less than $180,000, 640 credit score, and you're going to buy this house as a primary, those are the only 3 things you need to qualify for this product. That is it. It is extremely simple, okay? So how this works, you guys, and we'll get to this part a little bit later on the pre-qualification side and how we get you guys pre-qualified with what numbers you can utilize from these down payment assistance. We'll go through that in a little bit, okay? So specifically the 3 things I want to touch on again, CalHEFA, you got to have a 640 credit score. You got to make less than $180,000 total for your household income or the people going on the loans. And then the third thing is you guys have to live in this house as a primary house, okay? This house has to be a single family. It cannot be a duplex, a triplex, or a fourplex. If the house has a guest house or an in-law quarters, right now those are getting approved, so that should not be an issue. Manufactured housing, that has become huge in the last few years. Manufactured housing has become very big because it's a lot cheaper to buy manufactured properties than it is stick builds, okay? Manufactured properties, I can do that. So these CalHEFA down payment assistance, they work on manufactured properties. Here's the asterisk on the manufactured property, okay? The house has to be sitting on a permanent foundation. It's real simple. When a manufactured home gets moved out from the factory and it gets set down on the ground, it typically has axles and wheels on it. Those things are typically removed and then it's set on a permanent foundation, which is usually concrete, and it's attached to it. If that has not happened and the modular home still is sitting on the axle or is not on a permanent foundation, we cannot do down payment assistance loans on that, okay? Pretty simple. All right, how much money can you get with using this product? Great question, okay? The amount of money you can get gifted or the amount of money you can get for down payment on this is 6% of the purchase price, okay? Which is pretty huge, guys. If you're talking about, let's say, a purchase price of $400,000 times 6, that's $24,000 you guys would have for assistance. That assistance can be used for your down payment and your closing costs, okay? I typically tell people if they're using this program, they usually have to have about 1 to 1.5% of the purchase price for what they're going to buy on this, okay? Just to put some parameters and some numbers in your head. Now, how does this down payment assistance work? Well, we give you the down payment assistance, and the down payment assistance is attached to the property. It's a lien on the property, okay, guys? These are loans, okay? And so CalHEFA is going to give you, they're going to give you two different loans, one for your down payment and one for your closing costs. One of the loans is going to have an interest rate of 0%. There is no interest on the money at all, okay? The second loan they give you is going to be an interest rate of 3.25%, okay? Now, how do these down payment assistance liens get paid off? How do you pay them off? You're not required to make any monthly payments at all, okay? They're called silent seconds because they're silent because you don't make any payments on them, okay? Now, when you go to refinance the property or you want to sell the property, that's when you'll be required to pay these down payment assistance liens back, okay, with whatever the interest is accumulated on that, okay? All right, I see a lot of questions, and unfortunately, we just don't have time to answer questions. I'll get to some of those at the end, just kind of a group answers on those, okay, guys? All right, the second down payment assistance I want to talk about is Chenoa. Now, this one is very unique. Chenoa has been around for a little bit. This one is a forgivable down payment assistance, okay? This one actually is a forgivable grant. It can be up to 5% of your purchase price. And I have some of the parameters on here of how the money's forgiven. If you get the full 5% loan to you, that after you make 10 years of payments on time, that loan is totally forgiven, okay? If you do the 3.5% assistance, after 3 years of paying the loan on time, it's forgiven, okay? This is a very unique product. This one was around a long time ago. It fell off and it came back recently. To qualify for this, you have to have a 600 median credit score or better, okay? Only 600, okay? You do not have to be a first-time home buyer. On the CalHEFAs, remember, you had to be a first-time home buyer. The first-time home buyer, what that means in California, that means that you have not owned a house in the last 36 months. So if you've not owned a house in the last 36 months, you are deemed a first-time home buyer again. Okay, so if you sold a property 4 or 5 years ago, guess what? You're a first-time home buyer again, okay? Now, this product, the Chenoa Fund, does not require you to be a first-time home buyer. You can't own any of their properties, but you don't have to be a first-time home buyer. So if you bought and sold a house last year, you could essentially qualify for this grant. Okay. Now, this grant has a median income cap of $102,000. So remember, CalHEFA was $180,000. This one is $102,000. This one's a little bit lower. Okay. So this product is an amazing product because it does get forgiven at some point while you're owning the house. So this one is more of a long-term use of the down payment assistance, okay? All right, we're gonna talk about the sources of down payment and whatnot. Now, you guys, like I said, you'd have to typically have 1 to 1.5% of the purchase price for your down payment. Now, where does that money come from? Obviously, checking account, savings account, retirement funds. However, here's a real big silver lining to this stuff. The money that you need for your portion of the down payment, 100% of it can actually be gifted to you. Yes, gifted. That means a family member can gift this money to you, meaning that they can take the money from their bank account, retirement, whatever, and they can gift you your entire money that you need for your down payment. So in essence, you could buy a house with zero money from yourself. So if you have a family member, a parent, or a relative willing to gift you your portion of the down payment assistance covers the rest. That's all we need, guys. If you have cash, and I have a lot of people sitting on heavy sums of cash right now, if you're sitting on a shoebox of cash or a mattress of cash, unfortunately, cash cannot be used on these kinds of purchases, guys. So how do we source your money? When we go to source your money, we want to see that it's been in your bank account, your retirement, or it's been sitting somewhere for 60 days. Okay, so if you have a shoebox full of cash and you want to buy a house this year, I highly encourage you to take that shoebox over to the bank and deposit that money. Once it's been on your statement for 60 days, then that money is now sourceable and it can be used for a down payment for a house, okay? So thinking long-term on these things, guys, be strategic if you're sitting on cash with this stuff, okay? Now, gift of equity. You do have abilities here. If you have a family member or someone selling you a property, they do have the ability to gift you equity in the property that can also be used as your closing costs and down payment. I don't want to get into that too much, but I do see some questions about that. So yes, you can get equity. If there's equity in a property and it's a family member selling it to you at a discounted price, that equity can also be used as your down payment and closing costs as well, okay? All right, the cost of waiting to buy a home. I just wanted to touch on this real quick. Remember at the beginning of this, I told you how much interest rates have moved. I told you that from January 1st this year to today, we have moved a total in interest rates 2.25 points. Okay, at the beginning of this year, we're at 3.25. Today, right now, we're at 5.5. And like I was saying, guys, that is the most we've moved in the shortest amount of time in our history in the United States since the 1980s. Okay, now what does it mean for you as a consumer? This example I have on here is a skewed example. Okay, I have the interest rates on here only being a 0.5 point difference from the beginning of the year to now. Remember, I told you interest rates have gone up a full 2 points. Put on your seatbelts here. If you, from buying a house at the beginning of the year to buying a house right now, with the interest rate only being a 0.5 point of difference, you will pay a difference on the 30 years in interest, $154,000 in additional interest just for the interest rate changing a 0.5 point. Remember, I told you we changed 2 points. So you do that math right there. That means you're paying an extra, I don't want to scare anyone, but you're paying essentially an extra $600,000 in interest for a mortgage from buying a house late last year to buying a house right now. Okay. Now, the way interest rates are going and the way they're going to continue to go, guys, is they're going to continue to go up this year. And I don't see the brakes pumping on that anytime soon. I think that will probably settle in around 6% at some point, but I don't think we're going to have any major drop for a very long time, guys. So I really think that this is going to be the barometer where rates are at least for the next few years. Okay. A couple of questions that have come up that I just want to touch on while I go back into this. The loan process, and I'm going to highlight this real quick. You guys, when you come into me, you're going to go to my website. Typically, is how we start. My website is loandude.com. In the upper right-hand corner, there's a button that says Apply Now. You guys just hit the button. Everything is automated, okay? We are going to pull your credit. We're going to check your tax returns, your W-2s, your bank statements, your pay stubs, real basic kind of stuff like that. Once I gather all that information, it takes us 48 hours or 2 business days to review your information, then come back to you guys and let you know what you're qualified for, what type of down payment assistance you're qualified for, and then essentially how much money you will need on your own, okay? Once we do all that, I give you guys the golden ticket, the letter that you guys get to go home shopping with, okay? You take that letter out, we connect you with a realtor, you go out shopping, you find that house, you guys get into contract. The loan process that you see in front of you right here, this is once you're in contract, guys, okay? Once you're in contract, then things start moving real quick. Now, what does this process take when using down payment assistance versus a regular loan? Let me tell you guys, it's no additional time at all, okay? So if you went out and got a regular loan through me or got down payment assistance, your closing timeline will be exactly the same. It's no longer and it's no shorter, okay? So realtors are always real scared when they see someone has some kind of a down payment assistance that they're working with, because in their mind, they think it's going to take longer. I promise you, this takes literally no longer time. On average right now, we're closing these on an average of 25 days from when you get into contract to when you get your keys, okay? So it moves pretty quick once we're there. All right, the pre-qualification, how long is it good for? That's a great question. The pre-qualification letter is good for 60 days, okay? So once I give you guys the pre-qual, it's good for 60 days and then it's done. Okay, then once the 60 days is over, all you guys got to do is just touch me. We refresh your credit. We'll do a soft pull on your credit. We'll make sure you guys don't start any new debt. Make sure you haven't lost your job. We give you a new letter and you're out shopping again. Okay. Oh, this is a great question. Is there a prepayment penalty on these down payment assistance entities? No, absolutely not. You have the ability as a consumer to pay off your down payment assistance if you got a loan for it at any time, and there's no penalty to doing that. As I told you, when you go to refinance your house or you go to sell your house, those will automatically trigger the down payment assistance entities to get their payoffs at that point, okay? Let's see here. Resources, guys. Here's some of the resources that I touched on today. I promise you guys, and I know some of you guys came on here a little bit late, when we're done with this, we're going to email a copy of you guys of the whole entire presentation to you guys in PDF form, so you guys will have copies of all of this stuff to use, okay? The things I want to finish with here are this. Right now, guys, it's really imperative that you get started sooner than later on buying a house, okay? I have a lot of people who keep telling me that they're going to wait till things change. I've been doing this for over 22 years now, and I can recognize that things aren't going to change anytime soon. So, you know, it's a point right now to get real comfortable with the interest rates, get real comfortable with the housing prices. Those things aren't going to change anytime soon. So I highly, highly, highly encourage you guys. The sooner you guys can get started with this, the sooner we can get you guys pre-qualified, the sooner you can be out shopping. Now, I understand that buying a house doesn't happen overnight, guys. I want to tell you guys a quick story, and I want to finish with this. I have a gentleman who came to me 1 year ago, February of this year. He came to me, he said he wanted to buy a house. His dad owned a house that his dad was going to try to sell him, but the client had no credit. We pulled his credit, and when I pulled his credit, it just came up NA. So it was like nothing available. He literally didn't even have a collection, he just had nothing. And so last February of 2021, we started helping him build credit. I advised him to get 2 credit cards, like I talked to you guys at the beginning. If you guys don't have any credit cards, I advise you guys start with Capital One and Credit One. They will typically work with almost anyone to start a credit card. He got the credit cards. We started working with him. That was a year ago. He built some credit. This was the other thing. He hadn't filed his taxes for a few years. He just didn't think